You write that the quote, archetypal big cycle governs the rising and declining empires and influences everything about them, including their currencies and markets. The most important three cycles are the ones you mentioned in the introduction: the long term debt and capital market cycle, the internal order and disorder cycle, and the external order and disorder cycle. Can you describe this big cycle?
There are two orders. There is an order order, I mean a system, how the system works. So there's an internal order that is the internal governance system, and it's usually set out in a constitution or some agreements. And then there's the world order, how the world system. So, for example, in 1945, at the end of a war, which is basically a fight for determining the world order, the winners of the fight got together and created the world system as we now know it. 44, they created the Bretton Woods monetary system that determined the money, pretty much. And because the United States won and had 80% of the world's money, gold was money then, and it has 80% of the world's gold, and it was half the world's economy, and it was the great military power. The order was built around an American world order, so that the United Nations was in New York, the World Bank and the IMF were in Washington, and they built that new order. So classically, you have a war to determine whose rules we're following, and then you have the new order being constructed. After that, there is usually a period of extended peace and prosperity. Peace suits prosperity. And so there's not, and the reason you have the peace is because no one wants to fight with the dominant power. You know you're going to lose. You've surrendered. There's been the surrendering. They carve up the world. They say what it's going to look like, who's going to control what. And then you come into that period of peace and then prosperity, where then there's a working together. Usually at that point, you've wiped out a lot of the debt. You've wiped out a lot of the issues, the class warfare and so on. And then there's good working together. So those great periods, such as the Industrial Revolution in the late 1800s, or what we've experienced in the post-World War II period, are peaceful and prosperous periods led largely by the dominant world power. Over a period of time, since really 1500, and maybe before, but really 1500, when the Dutch invented capitalism. And what I mean by that, they invented the first capital markets, the first stocks and the first stock market. That since then, capitalism has been an effective tool for building wealth because it got resources into the hands of inventive people. That's when we moved from agriculture to the importance of inventiveness of people. They got resources, and then they built that prosperity. In that process of doing that, they create wealth gaps naturally. Those who make a lot of money make a lot more and than those that don't. And it also produces opportunity gaps because, for example, those who earn a lot of money, have that wealth, they have the power to educate their children in a way that others don't. And the gaps grow. And also the debts grow at that time. When they go around the world with their competitiveness, they earn a lot of money. So, for example, the Dutch Empire, learned how to build ships and that would go around the world. A key ingredient of this improvement in this cycle is the improvement of education. And by education, I mean the skills that come from education, but also civility, the ability to deal well together. So the Dutch invented ships that could go around the world, and they had military power, but they were also a very inventive society. 25% of the world's new inventions came from the Dutch. And so as they went around the world, they also brought their currency and they brought their military. They needed the currency. They paid for things and that currency. And then the more that happens, the more that becomes a reserve currency. And then they have their military, so they need their military strength. And so you see it evolve in all of those ways. But over a period of time, as they become more successful and more expensive, they become more expensive. And newer countries come along, like the UK, then learned to build ships from a lot the Dutch and could do that less expensively. And also when they become more expensive, so less competitive, and also the work ethic begins to change. They believe that since they're richer, they can enjoy life more. They don't have to work quite as hard. And so you start to see the tilt. You start to see the development of the top. And when you have a world reserve currency, that allows you to borrow a lot of money because those who want to save want to hold your money, and that means that they'll lend you money. And so those countries get deeper into debt. So you see that they gradually lose their competitiveness, and they get themselves into financial circumstances which are not good, and they have large wealth gaps, which set the stage for downturns. And when they have downturns, the first question is, do they have enough money? And traditionally, money is resources. So you classically see that the coffers are bare, that they're spending more money than they are earning, and they run out of money in the coffers. And their granaries are empty rather than stocked so that they give them the buffer. And as that deteriorates, that worsens conditions. And if they have a rival power that's also challenging them, they see greater internal conflict over wealth. And then they have the problems internally and the problems externally, which usually results in an internal war or an external war that leads to the change to the New World Order.
And to you, the Dutch Empire is a good example of that. The British, what are some of the key examples that you think about in the book of this process that followed the big cycle?
Well, the leading reserve currency empires, but it applies to all the empires, were the Dutch, the British, the American, and the Chinese. But you could follow the same pattern. In the book, it was very important for me to not just use words and concepts because that's subjective. It was very important for me to use actual measurements. So as you see in the book, you can see every level of this. You can see where's the education level, what is the military power, each one of those, and you could see them back going over the 500 years. And so you can see the arcs and the composition of those arcs. And what you see is really in most countries and most dynasties, you can see that. But you also can see through those numbers the health of those countries. Today, there are statistics that you could that are in the book that show what is the level of education, what is the level of economic output, what is the level of military strength, what is the level of a number of different measures of strength, so that you can then compare that. And I think that because they're objective measures of strength that you could see change, that shows the picture of where we are today. And I think one of the most important things about the book is that it allows people to monitor how those things are transpiring. I think for policymakers, are your policymakers doing a good job? And there's so much subjectivity in that. But I think it's very simple. If those lines on the chart are improving, if your health index is improving, then you're moving toward a better life. So that's what the book works like. Also, it was used to create a model for the future. In other words, there are cause effect relationships. Everything that happens has reasons, causes that preceded it, that made it happen. And so by having all those in numbers, one can see the probabilities of certain things happening. So that's what you see in the book. It's not just Ray's interpretation. I didn't want to make it Ray's interpretation because I don't know if I'm right.
Yeah. So one of the fascinating things in the book, so you have list these 18 measures, and there's like a little scorecard for the countries of the world today. So let's say US, China, and Europe, and what it was 20 years ago, and looking at the change from 20 years ago. And that's another indicator, the change itself, to see where things are headed. Maybe can you comment on, from a score perspective, how is US and China doing? And in the 18 measures, what are some measures that stand out to you as particularly important to think about today for the United States, for China?
Well, there are a number. Financially, um, what you see in the United States is that we're borrowing a lot more money, creating a lot of debt, and we're printing a lot of money. And our capacity to do that is limited, first of all, because when there's a sale of a bond, when the government borrows more than it borrows money because it spends more than it takes in, you have to sell a bond. And the world right now has a lot of US dollar denominated bonds because, as the world's reserve currency, they sold in them. And they have very bad returns, negative real returns significantly, and so on. So that means that more bonds has to be sold than are bought. And that means that the Federal Reserve is faced with the choice of having to raise the interest rate to curtail borrowing, which slows the economy and hurts the markets, or by filling that difference and producing money, the debt monetization, which produces an inflation in goods, services, and financial assets. So in that regard, that's the United States' position. In China's case, its balance of payments is better. China has displaced the United States as the world's largest trading country. In other words, more exports to other countries. And as a result, it's economically competitive, but it doesn't have the world's reserve currency. It's a real blessing. So the United States, it has the world's reserve currency, but it is risking it because of this imbalance. So if you look at history, you see that those go slowly, but when they go, eventually they go quickly. So there's a risk of that financially. Then there's the issue of internal order. So I'm just giving you the major ones, but I'll get into some of the other ones too. Right now, there's a lot of internal conflict in the United States, which affects how well it works. In China, there's less internal conflict because it's a more autocratic state, but also they've created this bifurcation of what is political and what is economic in terms of producing that prosperity. So if you stay out of the politics, pretty much, and then you're seeing entrepreneurship, you're seeing the finances of new businesses and so on. And so that internal working, that's subject to different people's interpretations, whether they like it or not. But the internal conflict in terms of those kinds of measures is less.
Sorry to pause on that for a second. So these measures, I guess you don't want to sort of romanticize any one measure or something like that, overinterpret any one measure. But is internal conflict always a bad thing? Is this Is it a complicated calculation, or do you kind of, the way we think about these measures that you've presented, we should be thinking like the higher, the better, the lower, worse, or I mean, of course, depending on the measure.
Well, in many cases, the conflict that produces the revolution produces revolutionary changes that lead to resolutions that and lead to new starts. And so their a short-term civil war
Hmm.
is a hellacious experience. And at the same time, it can be the transition to a new beginning. Um, Also, there are different types of conflict. Uh, Competition, which makes everything better, is a productive conflict, whereas destructive conflicts are not good over the short time. So that's how those go.
So within each measure, the story is complicated.
Yeah, but my measures are sort of clear, meaning how much political conflict, how much
Yes.
social conflict.
Yes.
In other words, you can measure conflict, you can measure fighting, you can measure crime rates, you can measure lots of different ways of conflict. So the measures are a composite of different types of internal conflict.
What are some other interesting measures? Maybe if you can also mention, like for me in particular, interest is education and innovation.
Yes, the classic cycle, the most important leading indicator, is the quality of education. Most importantly, broad-based education drawn as from the largest population, because you can never tell who the talent is going to be, so where they're going to come from. So, for example, if you look at the Chinese dynasties, the great Chinese dynasties, and the Confucian approach, it was meritocratic of everybody could sit for exams and so on, broad base of drawing in the populations. And you see that if you go across societies, because that draws on the largest number of population to get education. And it also, that creates a reality and a perception that the system is fairer, equal opportunity, not just one of privilege. And that helps to create social stability. But education is not just education in understanding facts and so on. It is education in civility, of how to behave together. And so if they're smart, they understand how to be productive because they work well together and they're productive. And then that leads to the next stage. You could see in the lines in the charts, I plotted these so that you could see in a typical cycle, you could see that education is the long leading indicator. And then you could see, as you mentioned, that what you see is inventiveness and technology measures then follow. And you see then also competitiveness in world markets follows. For example, in the early stages of a cycle, the industries that they go into tend to be very basic industry because they have cheap labor, something like textiles and simple manufactured goods and so on. But as the education rises, then they move up the value chain to greater technologies and so on, which raises incomes and raises productivity. So yes, those and as you say, there are 18 different measures like that. But education and then civility and the inventiveness. So you see it reflected in who's inventing what, and that corresponds then who's trading with. Who's a big trading country, and where's the value of economic output, and what are per capita incomes? They all follow those arcs.